Hey everybody, welcome to today's session. In today's video, what we're going to go over are the currency pairs of the week, how we are anticipating them to play out during the week. But obviously before that, we need to look at the fundamentals of the week. So here are the fundamentals of the week. Today, we see that it's Monday, obviously March 27th. We have about two fundamentals for the pound and the Australian dollar. Retail sales for the Australian dollar. This will be the fundamental of the week, right? This is the one that's strong. We have tomorrow on Tuesday, we have the Bank of England. The governor will be speaking. And for the euro, the President Lagarde will be also speaking for the European Bank, right? You have the CB consumer confidence for the US dollar on Wednesday. For on Tuesday, I don't really think they have an impact, but not that immediate impact that we always experience on fundamentals. So I'm not really going to be focusing much on these rather than what the speaker will be saying. So on Wednesday, we'll be seeing the pending home sales for the US. It's a 3-star volatile, but it's not that much volatile. It moves the market just by about 10 to 15 pips, and its impact is short-lived. So that means if it goes against the trend is immediately reversed. If it goes with the trend, it's just a continuation pump. So I never really focus on pending home sales. We have crude oil inventories. Obviously, this one always just impacts the crude oil, and I don't really trade that. On Thursday, we have inflation letter for the Bank of England. Obviously, a strong event, so we'll be keeping our eyes on this one. We have on Thursday GDP for the US, strong fundamental. Initial jobless claim for the US, strong fundamental. So on Thursday, these fundamentals will be very strong, all the way from the inflation letter, GDP, and the initial jobless claim. And then on Friday, just to top it off, we have GDP for the pound, we have CPI for the euro, we have core PCE price index for the US, and GDP for the CAD, right? And this is just a speech, that's why I haven't really spoke much about it, but almost all the fundamentals will be impacted on Friday. So on Friday and Thursday will be crazy. Fundamentals will be hitting hard on the markets, so we really need to be very careful with how we trade this week. Now, let's get back to the charts. On the charts, we see today was a very slow day. As you can see, since the markets opened, prices have just been ranging. On the DXY, prices haven't trended that much. So obviously, this indicates that all the US pairs, meaning Euro USD, Gold, GBP USD, USD CHF, really haven't trended that much. If they have, it will be under the influence of the other pair. So the US dollar hasn't trended that much. And once we look at the JPYX, this is the one that has moved. So on Friday, prices closed well, prices were on this resistance structure, and we can see prices have been rejected off that, pushing lower all the way until somewhere here. But if we look at the overall trend, overall structure, we see that prices are still in an uptrend, as we had a low here, higher, we had a high, higher low, higher high, and now prices are looking as if they're losing momentum. So we might see some kind of a higher low before we see prices push higher. As I said yesterday, I won't be taking any trades off the JPYX until this structure is broken. If I'm looking for that bullish trade, I'm not going to be taking any trade until this structure is broken. Now, for the bearish trade, I'll be waiting until this is broken, as this is where the most recent low sits. So I'll be waiting for prices to break below this low before I look for any sells on the JPYX. But if I'm looking for a buy, I'll be waiting for this structure to be broken. So that means we're still just watching much on what's going to be happening on the DXY and the JPYX or the JPY basket. So that was just a quick brief to give you a heads up on what's really happening. Obviously, for those that understand the correlation between DXY and JPYX, with these two breakdowns, I've covered all the pairs: Euro USD, Gold, GBP USD, USD JPY, USD CHF, Euro JPY, CAD JPY, and GBP JPY. For those that don't know their correlation, the correlation is that for the US dollar, DXY, right here. Let me type it out. So this is DXY, or also known as the US dollar currency index, right? So this is DXY, or also known as the US dollar index, right? Now, so let me show you how its correlation actually works, so that you can actually get a grasp of what's really happening, and you can actually keep on, doing, or it will actually make your analysis better, even easier, dare I might say. So it has a positive correlation. Also, it has a negative correlation, right? So like, for instance, this is the DXY right here. Okay, cool. Now this one, it has positive correlation with pairs that have the US dollar as the base currency, okay. And then this one here has a negative, whereas quote right? Guys, I apologize. I misspelled currency here. It's a double R. Cool. So now, for those that don't know what base currency is, these are the pairs that have OR XXX, excuse me, USD XXX. These are the base currencies, or the pairs that have the US dollar as the base currency. So when I say base currency, I mean the whatever currency we are talking about. Obviously now we're talking about the US dollar. So if any pair that has the US dollar as the first pair, so meaning USD JPY, USD CHF, that the US dollar is the base currency. But for the pairs that, when I say they have a quote currency, I mean any pair that has the US dollar as the second currency. So that means it's XXX USD. So here we mean like Euro USD. We mean like gold, since it's XAU USD. Here I mean GBP USD, right? So these are the quote currencies. So the US dollar has a positive correlation with any pair that has the US dollar as its base currency, and a negative correlation with any pair that has its, dollar as its quote currency, right? So that means if, for instance, here we are seeing DXY drop, if we see maybe DXY drop, maybe we anticipate to see the DXY drop until here, and then we are just analyze DXY and say, okay, DXY is going to drop. Instantly, you should understand like DXY is positively correlated with pairs that has the US dollar as the quote currency. So that means USD JPY will sell, USD CHF will sell. Inversely correlated with pairs that have the US dollar as its quote currency. That means Euro USD will buy, GBP USD will buy, gold will buy. So obviously you need to have this understanding as its quote currencies, or the correlation between the pairs and DXY, so that it can actually make your analysis easier. Literally, you can just analyze DXY and you're finished analyzing USD JPY, USD CHF, Euro USD, GBP USD, and golds. Full analysis just by analyzing DXY. And it will actually make your analysis easier. So same thing applies with JPYX. You just have to represent here. Instead of DXY, you switch that with JPYX. Now, same thing applies with JPYX. Positive correlation with pairs that have JPY as its quote currency, and inversely correlated with pairs that have, you know, the Japanese yen as its base currency. So I think this should come a long way to help you understand how, you know, you can actually analyze all these pairs, right? So that means here it will be, I don't think if there are pairs, but I rarely say we rarely trade them. Like JPYXXX, here are the pairs that, you know, are positively correlated. And then same thing applies with inversely correlated pairs here. It will be XXX. XXX JPY, which are most of the pairs that we trade. So it's like Euro JPY, CAD JPY, GBP JPY. They're inversely correlated to the JPYX. So if we see the Japanese yen or the Japanese basket, most of the people like to call it JPY basket. So if we see the JPY basket maybe rising, we understand like, okay, that means most of the pairs that we trade are inversely correlated with the JPYX. So that means Euro JPY, if JPY basket is buying, Euro JPY will be selling, CAD JPY will be selling, GBP JPY will be selling. The inverse correlation is what brings it together. So I hope this has been helpful to you guys. So with that being said, that winds up our session for today. If this video has been of help to you, please do like, share, subscribe, turn on the bell notification so that you'll be notified whenever we release content in the future. Until then, I appreciate you all. I'll see you tomorrow when the markets are more charming. Peace and love, guys. Take care out there.